G'day guys, today I'm joined by Michael Sampson from Equidel. Michael, welcome.
Yeah, hi Hillary, how are you?
Hey mate, I'm really well. How are things with you in South Australia?
Yeah, not too bad. We've got a bright sunny day today, which is good. We've got 17 degrees. We've just had 20 degrees over the last couple of days, so probably a little bit warmer than what you've got over there, but no, we're doing okay. And just for everyone, I was born in Victoria, so I'm a Ballarat boy, so I'm with you guys.
Mate, good to hear. Good to hear. And I'm always encouraged when I'm speaking to someone in SA and they tell me that the weather is good, because what you're experiencing now often flows through across to us here in Victoria. So that's encouraging.
True.
Hey, mate. Firstly, thanks for your time. I'm really excited to have you here. You're a property guru. You're the property guy, but compared to if I can be biased, compared to most people that I've spoken to, what I love about you is the fact that it's just so much data. You're a data numbers guy, for those that know me well, they know that I love data. So I'm very excited to have you here. So thanks very much.
Yeah, no, thank you for having me along, and hopefully people who view this can get some information out of it and find it useful.
Great. Hey, so let's jump into it. So, so much commentary about the property market here in Victoria. That's what we're going to focus on. We're going to focus on the Victorian property market. So much commentary. Tell me, is it doom and gloom, or what are the numbers? What does the data say?
Yeah, it's a good question, and we do hear a lot of different commentary around what's happening in the property market. I guess the first question I sort of answer a question with a question is which property market. We know that Metropolitan Melbourne from quarter 1 this year to quarter 2. Now, I'm only talking quarters, not in months generally, because the property market's a slow-moving beast. But when you're looking at, for example, the Metropolitan Melbourne property market, there's over 31 local government areas within the Melbourne metropolitan area, and within that there are suburbs within. For example, the city of Melbourne has, I think we've got 14 suburbs in that particular area. Or if you're looking far out west, in the Wyndham Council, we're looking at perhaps Wirrabee and Wyndham Vale and Tarnee, Truganina. All these property markets, they've got different proximities to perhaps employment hubs. They've got different desires in the area for people who want to perhaps live in them. So they tend to perform quite differently. So as a broad response, which property market? But overall for Metropolitan Melbourne, it's a drop of around 3.5% from quarter 1 to quarter 2 from a median sales price perspective.
Okay, no problem. So if that's the overall summary, are there some standout performances? Are there any suburbs? Is anyone winning in property in Victoria at the moment?
Good news, there are winners. Yes,
Excellent.
there are winners. So because there are so many property markets, they don't all perform the same way. Winners, as probably a general rule of thumb, I would say the inner east. We've seen some strong growth from quarter 1 to quarter 2. Melbourne East, for example, grew by 8.2% from a median sales price perspective, which is great. And in fact, from quarter 4 to quarter 1, it had a 0.7% growth. So we're actually seeing a consistent trend. Camberwell as well, we've seen growth in Camberwell for around, I think it's 11.2% from quarter 1 to quarter 2. It did have a drop from quarter 4 to quarter 1 around 8%, but if you look at those sort of 2 quarters together, performing well and are above. So that's probably something that's interesting to look at. What also I find, and I know I mentioned before about the different property markets all over Metropolitan Melbourne, but there's also different property markets as far as a price point perspective. Both of these markets are have a median price point of over $2 million at the moment, a median sales price of over $2 million. So that's another thing to keep in mind as well when you're thinking about property markets.
Okay, so it's not just what you're saying, that the data is not just about suburb and location, but also property price?
Correct. Yeah. So different price points, and generally over that 700,000 or 800,000 price point tends to be a bit more volatile than the lower price points. And then once you get to a certain point as well, people are just happy to lay the cash out because they've got it to spend. So it's very interesting to look at.
No, great. Hey, thank you very much for that. So if there are markets doing well, I can only assume, given the overall summary, that the property market is down. That there's going to be some pockets that are maybe underperforming. Can you give us some commentary, some insights in that?
Yeah. Look, there are some northern suburbs in Melbourne, metropolitan Melbourne, which perhaps the people who have looked at their values are probably going to be a little bit disappointed with the way they've moved. If you go far north, it's fairly stable, but sort of that middle ring, there's a number of suburbs there which have had drops of over 9%. For example, Thomastown, McLeod, Essendon, they've all had drops of over 9% from Q1 to Q2 from a median sales price, according to the Real Estate Institute of Victoria. So it's there are areas which perhaps selling might not be the time, or might not be the time to sell at the moment, but it is perhaps areas that generally just haven't performed as well. If we're looking east and west, again, there are different little pockets that have dropped, and even surprisingly, Deer Park hasn't performed that well as well from Q1 to Q2. So yeah, there are a few sort of that mid-range. When I say mid-range, that from a location perspective to Melbourne, sort of mid-range suburbs, which perhaps just are sort of not the winners at the moment, I'd like to say.
No, fair enough. Thank you, mate. And the other thing I wanted to talk about was, the federal government introduced the home builders grant, I guess, as a stimulus to encourage people to continue to either buy new property or renovate their existing property. And I can only imagine that was to just continue to ensure that our construction industry remains active. Is there any data to support that the grant has actually had that effect on the market?
Yeah, look, I'll answer this in two ways. There are probably two components. Firstly, and this is very much your field, the lending side, and has there been an increase in borrowings? And so just to look at that to start with. The owner-occupied lending, according to the Australian Bureau of Statistics, so everything we do and every data that we put together, it's always sourced from somewhere and it's accessible. Go to ABS, there's some really interesting stuff on there, abs.gov.au. But the owner-occupied lending from April to May actually dropped by about 10.2%.
Wow.
So obviously COVID was well and truly underway. Things are really slowing down. Owner-occupied lending has dropped. The government announced on the 4th of June, and I'm going to talk specifically about the building grant, so not the renovation grant, but more so just the building grant at the moment. So the 4th of June, that was announced. So if you had a house, and look, there are a whole bunch of criteria, so don't take advice from me on this, but around the $750,000 price point for a house and land and under was the criteria. And so what we saw from May to June was actually an increase in owner-occupied lending of around 5.5%, according to Australian Bureau of Statistics. So there seems to be a bit of a trend. Has it plugged the holes? Maybe. It'll be interesting to see how that unfolds over the next few months. So that's the lending side spoken about. Let's talk about the property market, the property side. That sub 700,000 price point property. And I'll say 700,000, 750,000 because these are the markets that the people who are looking to take advantage of these grants are probably going to be buying in. So if you look at far north, the Craigieburns, the Eppings, the Mernda, Q4 last year to Q1 this year, they're roughly have all grown around 3 to 5%, depending on which suburb you're in. And then from Q1 to Q2, they've seemed to drop by around that 2 to 3%. So looking at that, Q4 to Q2, sub $700,000 price point, they've probably at or still have grown since the Q4 from last year. If we're looking far east or southeast, in Narre Warren and Cranbourne, very similar story where we've had median price points which have perhaps held or increased from Q4 last year to Q1, and then perhaps held value or just dropped slightly. So in summary, sort of Q2 are still having these perhaps areas have still got a higher or the same median sales price as what they did in Q4, which is quite stable. Far out west, the Western markets, which are another market which are well under that 700,000 median sales price. If you're looking at Wyndham, Tarney, even out regional with Melton South, we've seen the Q2 median sales prices are still sitting higher than the Q4 prices last year, even though there's been a slight drop from Q1 to Q2. However, what I will say is there might be quite a number of people who have taken advantage of this and who are living in Tarney. I don't know, because from Q1 to Q2, we've seen a median price increase of around 8.6%, which goes against the flow of the whole market dropping by 3.5%. So that's quite extraordinary. Probably the only other thing to make comment is, as I mentioned before about the increase in owner-occupied lending, investment lending has actually dropped by 6.1% year on year.
Wow, okay.
But there's less investors investing in the market. And what we've also seen in some of these markets which are further out and at that lower price point, we've actually seen a decrease in vacancy rates, which is great for investors, because if you've got less properties on the market and you're about to rent a property out, you've got more chance of getting the price you're after, or potentially putting some upward pressure on rent. So there's some little data which we've tried to take advantage of. But I hope there's some numbers there that people can really sink their teeth into.
Mate, it's been great, thank you. So I guess in summary, it's not all doom and gloom, but we are feeling the effects of what is hopefully a once in a lifetime global pandemic. But in summary, mate, who are the winners?
Yep, winners. Inner East are really the winners. They're the ones that perhaps, there seem to be that over 2 million median sales price, and they're still growing, so that's great.
Great. And if there are winners, there's a high probability there are areas that aren't winning, and maybe we put that into the hold category. Who should be holding?
Yeah, perhaps again those mid-north suburbs, those areas, just you only lose in property if you sell low. You hold properties, and all assets appreciate and depreciate. So hang in there if you can, hang in there. And the stable markets, to summarise as well, are those far out suburbs which have got that lower price point.
Great. Hey, mate, thank you so much for your insights, for your time today. It's always a pleasure to speak with you. I might just put your contact details in the post. If anyone wants some further information, if they want to reach out to you, I'll put all your contact details in the post. Thanks very much. Stay safe, and we'll catch up soon.
Thanks, Hillary. Appreciate your time. Thanks, mate.